All right, now we take a look at the bigger picture. David Steinbach's with us, CIO of Hines, taking a look at the real estate market, the big picture here. Before we get into the weeds on real estate a bit, because I do want to pick your brain on that, tell me a little bit about how you're feeling now.
Sure. Yeah, so we're a real estate investment manager that really operates globally, deploying capital in 30 countries around the world. And certainly the view I have this year, it is feeling a lot better than it did last year. I think people need to remember that the private markets are in a much different place than the public markets. And the public markets have obviously had their recovery. And in the private markets, we're really only now beginning that recovery process, coming on the other side of over 500 basis points of interest rate increases. And so that change in cost of capital has had a dramatic impact to the pricing, and now there's a big opportunity. Most of the markets that we see right now are really in the buy signal. So that for us gives us a lot of optimism.
We've been hearing a lot about, rates and such, and that rates could come down, but that the housing picture will still remain tight because there's just not that much inventory. I know you look at commercial real estate, you look at residential real estate. Tell me a little bit about those two stories, the commercial side and the residential side.
Sure. Yeah, so on the residential side, we are seeing really, this is really globally, we're seeing a lack of housing really in all the major Western markets that we operate in. The U.S. specifically is over 2 million houses short, and we do think that's a real build opportunity in front of us. And so that is one of our key themes, at least, that we're going to be investing in, both in buying assets, but also building them as well. But in addition, on the commercial side, just more specifically on like office, for example, the new supply chain for office has completely shut off. And when you look across the U.S. today, there's really no real projects are going to be delivered anytime soon. And that obviously reflects a sentiment that has certainly been prevalent everywhere the last few years. What we're seeing, though, is a real bifurcation happening in the market, and the best office projects are getting very tight on vacancy. And the U.S., the last 2 quarters had positive absorption, meaning that there were more leases were signed than space giving back. And so that's a very interesting tipping point in the market that signals that employers are beginning to look at the space differently and certainly filling up the best quality. We think that will roll into the other elements of office, but for right now, it is the best quality, and we're focused on credit right now in the office sector.
Yeah, and you're deploying capital all over the world. I mean, I'm always focused on the U.S. because our investors are focusing more here. But at this point, the rate environment, how does it help you, hurt you, or you just sort of deal with it?
Right. Well, right. So I'll make one global, and then I'll definitely focus on the U.S. I mean, there is a decoupling happening right now with Europe and the United States. And normally, the interest rate policy is more closely correlated than it is today. And while the U.S. is holding steady to some signals of potentially some increases into the year, Europe is quite the opposite and are definitely in rate decline territory. Places like Switzerland are even potentially, there's talk of going negative again, which is just unthinkable relative to where we are in the U.S. In the U.S., though, specifically, rates are where they are, and we are pricing accordingly, and it impacts the amount of leverage that you can use, but that is probably a healthy dynamic for the market. And I do think the market has now fully absorbed where rates are, and even if they were to tick up a little bit, I still see a recovery path. And again, most of the markets we track in the U.S. are in the buy stage, and so that should give investors confidence.
I know you work in a lot of private markets, credit markets, but what do you tell investors now? Should they have real estate in their portfolio? How should they do that?
Obviously there's a tremendous opportunity on the private side. The public market is well treaded and well known for where it is. And again, its cycle is different than private markets. And so you really have to think about these as two separate cycles. And when you think about the private market, it is significant, and it encompasses infrastructure, data centers, and into everyday things, the living, retail, and all aspects of life, undergird real estate. And so within that, there are tremendous opportunities. And we also see it as a great hedge against what might be some higher than historical inflation that will be coming through the system. And certainly products like multifamily, where you're mark to marketing the rents every year, are a great natural hedge against increasing cost.
When you talk about different sectors, I mean, for example, retail or industrial or whatever, I know medical has done well, senior citizens' homes have done well. You said it's important to speak with professionals. I mean, not everybody is a real estate expert, just like everybody shouldn't be trading stocks. I mean, they're not all real brokers either, right? I mean, you got to look to the folks that you're making the point, make sure you check with people who know.
Right. Without question, real estate is a local game. There's certainly macro factors that affect how an investor should be allocating capital and how much and what proportions, and even maybe some bigger calls on the where. But specifically the what gets hyper local quickly, and you need to understand your cities. You need to understand the path of growth and dynamics that are happening at a very local level. So that's something that we obviously bring to the table. But any investor looking at making real estate decisions, you have to get into the details to understand what is going to create value and be the winner versus where just the tides are moving against certain markets in cities. And so just understanding that is absolutely critical.
Yeah, and tell me once again about the funds, as I'm asking, what investors should be doing. You do have some specific ideas. I don't want to miss this opportunity. I don't want to run out of time.
Yeah, I mean, the way we invest for investors is providing them great access to products. So it's either through a fund vehicle, which gives investors some additional liquidity and cash flow, allows an easy allocation to real estate. But we also offer direct investing as well. And so some investors that might be sitting in a market and they want to own an apartment building, they want direct access to real estate. We also do that as well. And so really being able to offer both direct and indirect avenues into real estate and be able to do that globally across the risk spectrum, whether it's to build or to buy, is something that we see as a differentiator for us.
Understood. All right. Thank you so much. It's great to see you. David Steinbach, CIO of Hines. Thank you.